This is from Markets Insider. Here are the 6 factors that suggest the stock market bottomed last October and will continue to rally from here. All right? So follow closely with me on this article. You're going to learn a lot, all right? This was published on 29th of April this year. So let's go through the 6 factors. Number 1. Inflation has peaked. 9.1% in June 2022. Have we seen that? We have seen that just now. This is exactly what he was talking about. 9.1% June 2022. And we observe the chart right here. It has peaked, gone below 5% mark. Right now it's 4% mark. Okay, very good. Tick off. We got the first tick already, right? And where's the article right now? Oops, not this one. Hang on a minute. And the second point. High yield spreads peak. So this one, what is this chart? High yield spreads peak. I'm going to show you this chart. This chart is from here. From fred.stlouisfed.org. All right. You can also search for high yield spreads. In fact, the word to search for is called the US High Yield Index Option Dash Adjusted Spread. Okay. Now, what are we looking out for this chart? We go back to the article. It says that we must look for July 6. They made a new high confirming July 6 was the low. All right. So July 6 should be the new high. So we go back to here. And you can see right inside this box. This is July 2022. All right. And this is the peak. From that point onwards, it has never gone above that peak. It has remained low. That's what it's trying to say. All right. So we verify against this. Wow, confirm. Wow. Yes, this did happen. We go back to an article. So confirm. Point number 2 is correct. Point number 3, the rule of the first 5 days. Since 1950, the 7 precedent instances of a negative prior year and the first 5 trading days, not the calendar days, but the trading days, gained more than 1.4%. 7 out of 7 times the market were higher. All right. So we're going to look at the chart right now. That's Jan 5th, 2023. We go back to here. Refresh. Here we go. So everything as per what we draw just now. Bottom left 2022, bottom right July. And we go to this particular spot, first 5 trading days right here. 1, 2, 3, 4, 5. First 5 trading days is showing going up. Okay, so we cross verify this point again. Very good. We go back here. So point number 3, confirm. We validated that. Next, point number 4. 2 consecutive quarters of gains. All right. So now we have the first quarter, which is January, February, March. Second quarter not finished yet. So if they are talking about 2 consecutive quarters, means Q4 plus Q1. So when the S&P posted back-to-back quarterly gains of at least 5% like it did in the last 2 quarters, the stock market was higher. The next year, 87% of the time, the average gain of 13.5%. So here we go. Draw the 2 consecutive quarter. So 10, 11, 12. 10, 11, 12. This is the first quarter. And then the second quarter is 1, 2, 3 until second quarter. All right. So these 2 boxes are showing that it is going up. That's the meaning of it. 2 consecutive quarters of going up. So confirm, we double check already. Yes, very good. So point number 5. More than 15 weeks above 200 week moving average. Not 200 day, 200 week moving average. This one a bit tricky. This one 200 week. Since 1950, 12 instances and never a single instance markets made a new low, referencing that the fact that the stock market has traded above its 52-week moving average for about 6 months. Whew. So here we go. Go to indicator, moving average. Now I want to put the 200 day is easier, but they are talking about 200 week. So I just put 200 day first to show you. To me, it's very simple. It's just like this cluster of candles is above my red line. That's it. Don't have to make it so complicated. So since the start of 2023, we have remained above our 200-day simple moving average line. That's all. Right? So you can look at 200 week or 200 day is okay one. So this is the one I'm looking at and pass. Point number 6. Investor sentiment is overly bearish. So Fundstrat highlighted that the difference between bullish responses and the bearish responses in the AII weekly investor sentiment survey hit an extreme low earlier this year. Only third time since 1987 this has happened. The last time it has happened was in 1991 and 2009. Both occurred after a market low. Pick your poison. We see a new bull.